Welcome back. Now, Asian markets were down across the board this morning after disappointing U.S. earnings, and a bearish outlook on hopes for a Fed rate cut began to weigh on Wall Street overnight. Now, Tesla and American Airlines both suffered bruising declines after posting quarterly results, while Amazon reported a slowdown in earnings growth as it ramped up one-day delivery operations. Now, American stocks had been bolstered in recent weeks by the expectations that the Federal Reserve will cut interest rates next week, but strong American economic data, including Thursday's report showing an increase in durable goods sales in June, has investors fearing a less dovish Fed announcement. The benchmark Nikkei index was down around 0.5% today, 21,647 points. The Hang Seng is also in a lower territory there, just above that 28,000 point mark. The Shanghai Composite still below 3,000 points at 2,944 points. Now, Wall Street stocks fell on Thursday, pulling back from records, with several prominent companies, including Tesla, American Airlines, and the likes, suffering bruising declines then. Stocks have been bolstered in recent weeks by expectations that the Federal Reserve will cut interest rates next week. But the strong economic data, as I said, has changed things along, moving the markets in different directions then with regards to goods sales in June, which could lead to a less dovish stance then from the Fed. The Dow Jones Industrial Average as well dropping around 0.5% in trade yesterday, 27,140 points. The broad-based S&P 500 shed the same margin to just above that 3,000 point mark, while the tech-rich NASDAQ composite tumbled 1% to 8,238 points. Well, let's take a look now at how the markets are faring out in Europe. It's a fairly green day across the board. The FTSE 100 out in London taking some positivity there as well, considering the addition of a new Prime Minister and new cabinet members there. It does mean that the market has certainly shifted along and a sense of positivity coming through, perhaps a new air coming through as well in the United Kingdom. The DAX out in Germany is also sitting higher, while the CAC 40 has taken a sense of positivity as well. That is despite how the markets have been faring and the bearish run now that seems to have come into the Asian and the US market. On the local front though, the JSE All Share is down, however, today, not sitting in positive territory, so unable to complete what has been a topsy-turvy week as well in positive territory thus far. Industrials have headed higher, having seen a much better day for the tech counters as well. The financials with sitting down at 2,102 points. And your commodities picture then as well, the resource shares are sitting down as well today. Not necessarily the greatest day, with the gold counters, however, also sitting in negative territory, but the platinum counters managing to sit higher. Over onto your resources now, and the commodities themselves are sitting a little bit higher. The gold is sitting at 1,418 points, just above that 1,400 mark, and maintaining that stance for quite some time now. Platinum has sat a little lower than it was yesterday, but is up on the day at $862 a fine ounce. Oil now still below that $64 a barrel mark. And a quick look at those currencies then. Red across the board. No sense of positivity coming through here for the local currency, even filtering past that 14 Rand mark, losing 1.7% in the last 24 hours or so. And that just means that it's back to its lowest mark in 2 weeks, and that sits at 14.16 now against the US dollar. Of course, you had the warning by the likes of Moody's, and you also saw the ECB hold interest rates and then not cut, even though they did signal for a cut later on in September. Let's unpack things now a little bit more. Now, we are joined, of course, by Warwick Lucas from Galileo Capital, as we usually are on a Friday. Warwick, appreciate the time. Thank you so much for joining us. I suppose the main issue at hand will certainly be the ECB having not cut interest rates. Are you surprised at all? Did that worry you somewhat?
I suppose I would have preferred to see them cut, but nevertheless, you typically find that these central banks, when they're working with such sort of thin slices, given that rates are so low, they like to sort of project a cut and then talk about it 1 month and actually do it the next, and sort of drag a process out in terms of manage expectations and then fulfill them, as opposed to just do something.
Would you call this then a sense of shooting too quickly if he was to cut interest rates? Because that's what Mario Draghi then warned against in terms of the ECB, saying that it perhaps wouldn't be necessary to perhaps shoot too quickly and then worry about it later, but we will then offer some sort of stimulus nonetheless.
Righto. So one of the things that they want to do is they want to be sure that in cutting rates that they're not projecting a sense of panic about it. So that's the trade-off really that he's talking about there. So we saw at the time that the Fed introduced a surprise cut right at the beginning of the year, that there was initially quite a lot of trepidation around that. In reality, Europe is quietly coming off a low base. I mean, we still see EU inflation. It's ever so steadily creeping higher. It's gone up about 0.5% in the last 2 years or so, which obviously isn't a heck of a lot, but then in a deflating economy, I suppose it's quite a lot. So it's not as if the EU is completely dead on its feet, but it is very slow. It is improving, but perhaps too slowly, and I think rate cuts are called for there.
You saw that Rand weekend then, 14.16, probably its worst in a little over 2 weeks now. It was 14.09 a little bit earlier, and that was 2 weeks, so this must be certainly a little worse so than that. Yes, the Moody's coming through. Did the ECB also have some sort of factor in where the Rand went?
Yeah, I would have thought that predominantly it's local factors coming back into the Rand at the moment.
So certainly that Moody's warning then with regards to Eskom then coming into play here.
Yeah, it's certainly introducing an element of uncertainty into the local market, because the reality is that that Moody's is, look, it's not surprising at all, but they're flagging, right, hard decision time is coming closer.
And it certainly is going to be a hard decision now, because we don't have the capacity to take on too much more debt, and we're sitting with a situation where we're giving Eskom more money to perhaps try and fund their debt situation. 59 billion does not cover 400 the last time I checked.
No, absolutely not. The reality is, I think that Eskom needs equity injected of probably in the order of 150 billion rand in the next 5 odd years or so. So I mean, and that's a big number of committed capital that's needed. It's not borrowings, and that's what Moody's concern over Eskom is that it's simply a shifting of borrowers. The reality is that we need real committed capital in there, and that is going to take a restructuring in the way in which Eskom is operated. It's going to need the actual appointment of this restructuring officer, whoever he is. It's going to need political support for that restructuring officer. And by the way, he is going to have to be as tough as nails, because there are some very, very firm, decisive actions that need to be taken there.
Yeah. Okay. Well, let's very quickly head on over to the US as well. They had an earnings season, continues to be out. 80% of those companies beating estimates. Even the likes of Google, Google's parent company, rather, Alphabet, as well, coming out yesterday with some better than expected numbers. But Amazon seemingly struggling. How have you felt about this earnings season? Hasn't it, for you, better than expected?
Well, it's a mixed bag. I think it's some up, some down. As you summed it up there. I mean, you got Amazon on one side, Google on the other. Look, Amazon is always a difficult one to call, because there's so much reinvestment happens in the company. I mean, the earnings estimates are always a terribly difficult exercise, and it's a huge company, by the way. So that one really does sort of tend to move the needle a bit. But I think the key issue is going to be to see, what does this GDP figure look like. It's going to be an interesting one, because it now comes in the wake of a period of quite a long trade tete-a-tete, and we'd now be interested to see, well, just how much has that affected at least this one protagonist, and will it start pushing the need for accommodation?
And more stimulus maybe. And I mean, we've certainly seen the US try the accommodation thing. It certainly worked a while ago, and they stopped that process. Now, the fear of having that 1.8% possible growth, according to a Reuters survey for the US and the world #1 economy, compared to the 3.1 in the first quarter, is that perhaps time now where the Fed begins to look and say, yes, we definitely have to cut when it comes to July 31st?
Okay, so I think the one thing that's important to appreciate about the US is that over the last few years, basically, 2% is pretty much the old 4%. Okay, we're talking about a relatively maturing economy with a somewhat aging population, not as bad as Europe, but so we would be inclined to scale our expectations back anyway.
Yeah.
But clearly below 2% is certainly a pretty sluggish number, and we'd be looking for the Fed to provide some accommodation here, and they have capacity to do so.
All right. Well, Warwick, appreciate the time. Thank you so much for it. Really appreciate you coming through on this Friday as well to unpack that market picture. There's a sentiment and a sense then of how the markets are faring thus far this afternoon. A negative tinge for the JSE All Share, and the Rand even weakening to around 14.15, beyond its worst mark then in 2 weeks is where the local currency does sit. Of course, we do have our SME Focus coming up after the break with my colleague Diabo Seto. Do stay tuned for that. And later on, of course, we do have that book review for you as well with Nastasia Arnze. Stay tuned. This is On Point.